I'd like to welcome you to today's webinar. The title of today's webinar is Developing and Financing a Capital Plan for a Water System. Just a little background, this is one of about 17 webinars we are offering. The Environmental Finance Center Network is offering as part of our Smart Management for Small Water Systems project. Those 17 webinars are, they join about 65 in-person workshops across all 50 states and 5 territories, really focused on providing training and technical assistance to small drinking water systems. Today's webinar is focused on financing capital plan, but some of the other topics that we offer, both training and technical assistance for, are asset management, water loss reduction, collaboration, fiscal planning and rate setting, energy management, leadership, and funding coordination. So I just wanted to kind of give you a little background. If you wanted to know more about our programs, or this program specifically, you can check out our website, efcnetwork.org. Again, that's efcnetwork.org. So we have about 300 registrants today, and people are still signing on. So I wanted just to let you know that all attendees will be muted so that we don't get any background noise, phones ringing, sirens going off, etc. And I'll be providing from my office technical support for today's training. And so I want to point you to the control panel that you'll see in the right side of your screen. Down near the bottom of it, there's a drop-down menu that's called questions. So because there are so many people today, if you have questions, please type them in there, and we'll compile those questions. We'll save them toward the end. If there are similar questions, we'll group them together, categorize them, if you will, so we can try to address as many questions as possible at the end. And anything that we just don't have time to answer today, we'll certainly send out via email. We're going to send a follow-up email anyway, but we'll send answers to any unanswered questions after today's webinar. So, and also after today's webinar, we're recording this webinar, and so the slides and the audio will be posted on our website, again, efcnetwork.org, about a week and a half from now, and you'll get that follow-up link in that follow-up email. So without further ado, I want to introduce my colleague, Stacy Isaac-Barazer from the Environmental Finance Center at UNC-Chapel Hill. She'll be today's trainer. Stacy, can we hear you?
Yeah, hi, good afternoon, everyone.
Great, so the audio sounds good, so without further ado, I'm just going to pass it along to Stacy.
Great. Well, thank you very much, Chris, and thanks everyone for joining us today. Hopefully the slides are advancing and everyone can follow along. But as Chris mentioned, I'm with the Environmental Finance Center that's based at the University of North Carolina in Chapel Hill. And this is a picture of our team, and Lexi's also joining us for technical assistance today. She's in the red sweater. And we kind of, all the EFCs really work on how you answer the question of how to pay for environmental services. And so we at the EFC at UNC do that through applied research, teaching and outreach, program design, and evaluation. As Chris mentioned, we are part of a network of environmental finance centers called, so we refer to ourselves as the EFCN. This is a little bit of information about the whole network. And then specifically this project that is affording us to bring this webinar to you today is called the Smart Management for Small Water Systems, and it's being funded by EPA, and we're doing workshops and technical assistance in each state and territory, and then we're also doing many webinars such as this one. Some of the areas of expertise that we are assisting communities with through this particular grant from EPA are listed on your screen right now. So everything from asset management to water loss funding. Today we're going to cover a little bit about multi-funding coordination. Okay, so that's a little bit about us in terms of an introduction. So what I was saying here under areas of expertise, we're talking a lot today about multi-funding coordination and then capital planning, which is related to things like asset management and fiscal planning and rate setting. So we're touching on a couple different bullet points here. We'll show you at the end of the webinar how to get direct technical assistance on any one of these areas. This is the project team, sort of lists all the different EFCs across the country. And then, you know, normally at this point in one of our live in-person events, we would ask the folks in the room to introduce yourselves. But since we have close to 300 folks joining on the webinar today, we won't do that. And instead, this is going to have to serve as an introduction for who's participating today. So this is a map of the registrants for the workshop. So there's a very diverse group of participants today. In terms of objectives for the workshop, we want to try to understand the spectrum of financing options for water infrastructure projects. We want to learn a little bit about creating a capital plan for your water system. And I'm going to try to demonstrate a couple tools that you can use to create a capital plan. And then we want to compare and contrast grants versus loans and other more sustainable funding sources. In terms of a rough agenda, the next slide is showing us you know, we'll try to stick to this and leave time for question and answers at the end. All right, so in terms of an introduction or background, there are several different potential funding sources for water infrastructure projects. It can be difficult for especially smaller systems who may have fewer resources to navigate all these different programs and find which ones suit their needs best. Applying for funding from one project, applying for funding for one project from these different programs can be complicated. So a lot of times it's advisable to cobble funding together for a project and borrow or get, you know, some grant funding from different sources, but trying to navigate that process can be difficult. Some states, fortunately, have developed unified funding committees to help small water systems to kind of go through and figure out this complicated process. And then there are certain best management practices, is what we're calling them today, that can increase a participant's or an applicant's chances of funding from one of these funding programs. So that's sort of where we are jumping into this from today. Coordinating funding programs has benefits for different sectors. For example, for the funders, having coordination among different funding programs can help each funder to support their specific goal or programs. So the different funding programs have targets, sometimes that are set nationally that they're trying to meet. For one program, it may be encouraging water conservation projects. For another one, it may be that their focus or their target are rural communities. And so when they coordinate and share and know about each other's programs, they can meet their targets better because it can direct applicants to the most effective funding program. For the applicants, there are also benefits too. When the different funding programs are familiar with each other's programs, then it can improve the customer experience for the applicant, because they can, maybe if they approach one funding program that's not the best fit, they can be referred to a better fit, a different program. And then generally for citizens, it stretches public dollars when there's coordination and more efficient use of these kinds of funds. I wanted to give you guys an idea of the spectrum of coordination that's happening, since we have folks from many different states on the phone today. And the first caveat about this slide that I call the universe of funding coordination, it's fairly dated data. We did a study on this back in 2007, and at that point there were about 34 states that reported some level of coordination. There were about 27 states and federal funders that participated, and in 6 states the applicant had to apply to the coordinating body. They could not go directly to one funder, but they had to, their first point of entry, if you will, had to be through this coordinating body. In 5 states, there were staff positions for coordinating, so that represented a little bit more of a structured program and involving budgets, for instance. In about 3 states, there was a distinct budget for coordinating efforts. A more recent study was done by a group called the Small Community Water Infrastructure Exchange, and I wanted to point the folks on the webinar today to this as a resource. So this, commonly called SHWE, is a network of water funding officials, and SHWE sort of came out of the member association, if you will, for state drinking water revolving fund programs across the country. So that organization is called CIFA, or Council of Infrastructure Financing Authorities. And under that organization, there is a sort of a subgroup that has been doing this small community water infrastructure exchange for a number of years. They do have a website that's listed here. And I think one of the key things for folks on the webinar today is that that site lists the contacts for each state. So you can go and click on there and see the contacts for the different funding programs in your state. And they did a survey that probably was more for federal partners, EPA and USDA to be particular, but they, so they may not have a link to that recent survey on their website, but they do try to keep the contacts updated. In terms of funding coordination practices, from the study that we did, sort of trying to classify, if you will, different funding coordination efforts in different states around the country, we found some practices that were fairly common. So having some sort of structure was a pretty common element, and then having a group of participants that were very committed to the process, we thought we also found was common. USDA in particular, of all the federal agencies, or even some states have their own state-specific funding sources, but of all the different participants that we found across the nation, USDA was commonly involved with these kinds of efforts. We found that where they existed, there was a strong leader. Somehow there was strong leadership, and they tried to focus on a few services and not be a catch-all. Things that we found to be uncommon were that funders were required to fund projects that were contrary to their funding objectives. Like I mentioned before, that's one of the benefits of this sort of coordination effort. We found that it was rare that these coordination efforts involved significant staff resources. Again, they were not very comprehensive, but they tended to focus on a few service areas. And it was uncommon that a coordination effort in one state simply mirrored or resembled the coordination efforts in a different state. So in other words, they were pretty specific to the needs and conditions in the individual states. At this point, I will hand over to my colleagues, Brad and Chris, to run 2 polling questions. So I've given you a little bit of an overview of what these coordinating bodies look like in different states. And so I'm just kind of curious of the folks that we have on the webinar today, what kind of coordination efforts exist in your state? So they're going to run those polls now. I'll hand it over to you guys.
So we'll give everyone about 10 more seconds to answer this poll question. Stacy, did you have anything you wanted to say about the results?
Actually, because of my presenter role, I guess I am not seeing the results. So Brad, do you mind telling me, giving me a rundown of what you see?
So for the question, does your state have a regular meeting of various funding program administrators? 28% of respondents said yes, 9% said no, and 63% said I don't know.
Okay, that's interesting. So most of the folks on the call don't know, and that's sort of what I expected. And so one of the things we'll try to do is point you to some places where you can figure out if such a thing exists in your state. And I would assume then that the answers to the next question were similar. Am I right, Brad? What were the percentages there? Or have we not run the second one?
I still have to ask that one.
Okay.
Yeah, we'll transition to that one.
Okay, thanks.
And again, I'll give everybody about 20 seconds to answer this question. Okay, so Stacy, the results for does your state have regular meetings where potential applicants meet with a group of different funding programs at one time? 18% said yes, 21% said no, and 61% said I don't know.
Okay, that makes sense. So pretty similar results. Okay, so we want to make sure that folks can figure out if this sort of coordination resource is available in their state. So the difference between the two polling questions, the first one is, were the state programs or the funding programs in your state, were those staff or administrative people meeting and talking about their different programs? And the second one, in some cases, when they do have those sorts of meetings, they invite potential applicants or communities to come and basically showcase your project to the different funders, and then they'll help you decide which is the best place to apply, which is the best program, I should say, to apply for financing your project. So I'll go back here to see this SHWE website here. That's one way, and we'll send this out like Chris said, a week and a half or so into the future here, and you'll be able to click on this link. But this one is a fairly short website if you want to write that down or go to that URL. And that, if you select your state there, it'll give you some clue if there is a coordinating body. And then this other slide that says additional resources, EPA published a handbook of coordinating water and wastewater funding. It is pretty old. It was done back in 2003, but it showcases certain states that have coordination. And so if your state is listed there, you might be able to get in touch with the coordinating body. And then this lists the 2007 work that I referred to earlier that was done by the EFC at UNC. Again, it was also several years ago. So there's definitely work to be done in this arena. Okay, so I want to sort of transition us at this point. What are the funding programs in your state? So another way to figure out the potential sources, loans or grants in your particular state. Through this project with EPA, we have funding tables for each of the states and territories. So I'm going to just transition to that right now and show you through the website how you can access that. Okay, so hopefully everyone can see the EFCN website. This is what it looks like when you go to the home page. And from the home page, and I'm hoping my colleagues will interrupt me here if they are not following with my browser here. But they are, I'm sorry?
So far, so good.
Okay, great. Thank you, Brad. Yeah. All right, so we have upcoming trainings, which is probably where some of you learned about the webinar today. And as we move along, there's resources. This resources tab, if you look at the last item here, funding sources by state, here there's a map that gives you links to PDF documents that list different funding sources. So this is South Carolina's that I pulled up. And this particular table was updated in May of 2013. So you would find that some of the tables here were updated under round 1 of this project, and so that was a couple years ago, and then others would say that they were updated in May of 2015. So as we do workshops in each state or territory, we're kind of going through and updating these tables. The information changes from time to time, so I'd encourage you to, even if you download this PDF onto your own machine, do check the link into the future, because we often find contact information, especially different administrators being hired into these positions, but it lists here the organization's name, the program, whether it funds water and wastewater, or sometimes, in this case, energy efficiency. It tells you very briefly in a sentence or two the purpose of the funds. If we can find any application dates, they're also listed. And then really useful is the website, the specific web page where we can find one for the program, and then a contact. And we try to provide a direct phone number and email address here. And so I think that's probably the contact column is probably one of the most important columns in this table, where you can get in touch with the folks that are managing or administering the program to get more information from them. So this is one source as well to figure out if there is some coordination going on in your state. You could contact one of these funders and see if they're involved with something like that. And if they are the type of coordination body that allows folks to bring their projects before the whole team of funders, that's an opportunity that you might be able to take advantage of. So I hope that folks will go check out that page and look at the tables for your individual states. All right, heading back into our PowerPoint slides here. The next section of the webinar today is going to talk about applying to a funding program. In terms of background, how do you pay for an infrastructure project? We're going to focus on the last 2 items on this list, but you can save money in advance and pay for a project just like you would save money in advance maybe and pay for a personal vacation. You can pay as you go. Some people can handle their receipts on a monthly basis, let's say. But the two ways that we're going to talk about in this webinar is paying afterwards. So someone loans you the money up front, and then you repay that loan over time. And then we cannot touch this topic of how to pay for a project without hitting on grants. Grants are everybody's favorite. But a little word on grants. Grants are not completely free money. While you're on this webinar, I hope you don't get an email like this saying, click here, free grant money. This is not a good way to find a grant, by the way. Even if you are looking for grants or depending on grants, your IT people will not be happy if you clicked on that link. Like I said, grants aren't completely free money. There is time, staff time, and expenses involved in applying for a grant. And at the bottom of the list here, the second to last point, is there lots of competition for grant funding. And that point is really important. Maybe I should put that in bold because it sort of exacerbates all the other points here. The fact that there's more and more competition for grant funds means that you have to spend more time on the application. So it's more expensive, in other words, to apply for a grant. Because it's more competitive, the folks making the decision about the grants can usually take longer because I often see, due to an overwhelming number of applicants, we need some more time to process what we received before we can make a decision. So that leaves you with more time kind of wondering what's going to be your next step. Can you do this project or not? And then again, since there's more competition, more and more strings can be attached, more and more reporting requirements and that kind of thing. A smart approach by grant funders has been to require a percentage match. And so we've seen that to become more common and the percentage match to be larger. And lastly, grants can be difficult to sustain. If you did not come up with the money at your utility to install a piece of equipment, sometimes the asset management plan or the repair, maintenance, and rehab of that piece of equipment isn't comprehensive. So that's one of the things that we've seen from the era where grants put in a lot of projects. So in the old days, water systems usually took advantage of the federal government's construction grant program of the 70s and 80s. A lot of systems that need to be replaced now or major rehab, they were created during the 70s and 80s through these grant funds. And it seems like free money. But capital finance today is looking differently. That money was never really free. It came from tax dollars. And now the financial burden has really shifted at this point away from federal and state grant dollars to funds being generated at the utility or the water system itself. And this graph, I think, highlights that really well. So basically, grants, largely speaking, have been replaced by loans. This chart is actually about EPA wastewater spending, but it's a very similar picture for drinking water as well. So we can see the total in $2,000, that black line, the darkest line on the chart here. Basically, we can see that the trend has gone down quite a bit. The construction grant program ended. It sort of was replaced by the state revolving fund programs, but the level of grant funding is nowhere near what it used to be. And I haven't found anyone who's going to argue with me yet that those lines are going to start to go back up and more grant funding is going to be available. That's not very likely. So if that's the situation with grants and they're being replaced by loans, we're going to talk a little bit about loans right now. So loans are typically from some sort of bank in general, if we look at the general definition of a loan. But in this case, it can be from a government-sponsored program, such as the Drinking Water State Revolving Fund or Rural Development Funds by USDA. So when we're looking at loans, we're looking at going into debt. And so the question is, why borrow? Well, water infrastructure has a long, useful life. So you may wish to amortize the loan over the life of the equipment. We're talking about equipment here that has useful life of 10, 20, even 30 plus years. So even from a financing perspective, when we think about equity, it may not be equitable or the most fair scenario to make current customers pay for stuff that people are going to be using in the next 20 years. So you would have a new customer base in 20 years. So there are lots of good reasons to consider borrowing and going to the debt market. Bonds, I'll just mention, that's another type of debt. A bond is a written promise to repay money on a specific schedule, usually at a fixed rate for the life of the bond. And there are two major types of bonds that relate to local government utilities. One is general obligation bonds and the other is revenue bonds. GO bonds, or general obligation bonds, are backed by the taxing power of a local government, whereas revenue bonds are backed by the water and sewer rates, for instance, of the utility. So they're a little bit different. We've generally found that bonds are not common for smaller systems. That's generally speaking. I was in Kansas last week, and they have a very friendly bond climate, let's say, in Kansas, and so they are able to issue bonds relatively on a small scale, which is not very common. Usually there's so much cost involved in just issuing of bonds that small systems do not go that route. But still wanted to mention just what a bond is, and that's one type of debt. When you look at loans and you go to the debt market, lenders look at certain things before they decide, even things like your interest rate, for example. So they look at creditworthiness. They look at your ability to repay the debt. And having something like a capital improvement program can increase your chances of funding. And so that's sort of what we're going to go to in this next section of the webinar. We'll talk about developing a capital plan. So the objectives here is to understand the benefits of capital planning, and then understand some of the components of a capital plan. And there are a couple of tools that we have that will demonstrate, that will help you with that. So in terms of how much money do you need for your capital plan, we'll look at cost, and we can categorize costs into three major types of costs for a system. So operating costs, what you need to run the system on a daily basis, day-to-day running and maintenance. Then you have your capital costs, which they involve repair and replacement of the existing infrastructure and planning for new infrastructure. And then we have debt service. If you owe on loans and bonds, that's something that's a cost that we have to factor in every month or every year. There are two main types of revenues at drinking water utilities. The main type, system revenues, money from rates, tap fees, impact fees, grants, other sources. And rates is in bold there because really that's where the money comes from ultimately, the rates that you charge to your customers. To be a true enterprise fund, by the way, system revenues should not involve taxes. Transferring funds from the general fund, which is where taxes are involved, to a utility like drinking water system is not a good governmental financing practice. And then the other type of revenue would be money from the bonds and loans, debt, in other words. There are several different types of reserve funds, and reserve funds are very important. So the first one here is capital reserve fund. That would be for infrastructure rehab and replacement. Then we can look at a repair fund. So there are known maintenance costs that you're going to have. It's ongoing, and those are foreseeable. You expect those. An emergency fund would be a little bit different because these are unanticipated. You don't know exactly what's going to happen, but things do go wrong. So that's how you distinguish between a repair fund and an emergency fund. And then the rainy day fund is unexpected revenue shortfalls. Sometimes it's called the unrainy day fund, but it, for example, depends on things like weather changes and that kind of thing. How much do you need in your reserves? That's a tough question, and there is no definite rule for how much a utility should put aside. Usually you start small. If you don't have any reserve funds at all or a reserve account at all, you start small and you build up to a certain target. That target, there are different things that we've seen utilities use in terms of a target here. So maybe you look at putting aside in a reserve fund enough money to pay for your most expensive piece of equipment. So you look at your system and you decide which is the most expensive piece of equipment, and that's what you target to maintain in your reserve fund or account. Maybe it's enough to cover your costs if you had no revenue for 2 months. So for some reason, maybe your billing software was down, or there was some sort of disaster, natural disaster. How much money would it take for you to operate for 2 months? And then another thing that we've seen with some utilities is having enough money to cover the projects in your capital improvement plan. So that would probably indicate a larger reserve fund than the other examples. But it's something to discuss, and it's utility specific, and it's probably a good practice to also write this down and have some sort of resolution or ordinance that sort of documents the targets for your reserve funds. That helps, again, going back to the concept of transfer funds between the general fund and the utility or enterprise fund. If you have a written policy or ordinance or resolution, it helps to protect those reserve funds from folks that are trying to buy new fire trucks or something like that within the local government. So a good practice there is to write this down in some way. In terms of long-term funding, this is where capital planning really comes in. It's not for the everyday operation and maintenance. Once you figure out how to get the longest life out of your assets, you have to start planning to have money set aside to replace these assets when it's needed. So a long-term capital plan is an official multi-year document that identifies and prioritizes your capital projects. And it looks at funding sources and timelines to get those projects underway. The window for your capital plan could be 10 to 20 years. You're looking at growth needs and expansion within your particular community. And it's hard. That's a big window of time when we're looking at 20 years. How can you anticipate what sort of infrastructure projects you may need? One of the things you can do is talk to regulators and see what may be on the radar for changes in regulation that you may have to get new equipment to address. So that's one way to look at it. Obviously, that time frame, things aren't going to be very definite, but we can have a general plan for the 10 to 20 year window. In terms of capital improvement programs also, you want to identify the deferred maintenance problems or where your current service may be inadequate, and you want to prioritize based on need, recognizing that there may be hidden infrastructure. Well, there's a tendency for hidden infrastructure that needs to be ignored. So think about the pipes and that kind of thing that you have in the ground that you may not see often, but they may have big effects in terms of how much you have to have in your CIP program. Timelines. We're going to start here with, again, the 20-year time frame and kind of drill down. So if you use an asset management plan, for instance, to look at your capital expenses in the long term, say 20 years, the asset management plan is one place to get that 20-year window. And if we drill down a little bit more, we can create a capital improvement plan with a narrower timeline. So here we're looking more at the short term, maybe 5 years. So that's more detailed than your 20-year plan. And you can specify projects in this time frame of 5 years, and you have more accurate estimates of what those projects would cost. And you should have more specifics in terms of where the money will be coming from to fund those projects. And then we can even get a little bit narrower in the 1 to 2 year time frame. We can actually have a budget, so a capital improvement budget for the projects that you want to commit funds to, and work on actually getting that budget approved and adopted. This is an example of a CIP or a capital improvement plan. So you see a list of projects and equipment on one side, the first column there where it says project name, and then looking at planning years going into the future and the totals that these different projects would cost. So this is just an example of a simple format for a CIP. Now here, if we are going to figure out how to replace some of these things, we need to think about what that will cost into the future. Now, it's not going to cost the same thing if you put a piece of equipment in 10 years ago and you have to replace it 15 years after you install it. It's not going to cost the same thing it did 15 years ago or 10 years ago. So we have to look at inflation, but I'll get to that a little bit more detail in a minute. Just to find out the prices. In some cases, we don't even have good records at our individual utility about what that piece of equipment cost the first time it was installed. So you can start by calling a vendor, calling a few vendors. If they think that there's a chance that you might buy some equipment from them, they're usually very forthcoming with information. You can ask other systems as well. And if you can find past expenses, then that's the best place to look. As I said before, you do want to account for increases in cost or inflation. It's not going to cost the same thing to replace it as it did 10 years ago to install it. So a couple measures or indices for inflation. One is the more common one, Consumer Price Index or CPI. And this measures the average change over time in the prices of urban customers. So these are more residential, if you will. The basket of goods that are involved here are consumer goods and services, so like transportation and bread, food items, for instance. So while CIP is pretty common and familiar, at least to folks in the general public, it doesn't represent the best or most relevant items when it comes to water utilities. So the construction cost index is another index that may be more relevant. It includes the average price for labor and key construction materials from 20 different cities across the country. And that is also pretty accessible if you look online and try to find the CCI. And so recommend, if you're going to be using inflation, which you should for your CIP program and your budgets, to use something more like the CCI. And these aren't the same. This is an example of one of the blog posts from the EFC at UNC. And there's a long URL at the bottom of your screen, but we'll give you a chance to let us know if you want to sign up for these blog posts at the end of the webinar. So this one looked at the annual changes. This particular blog post had this chart that looked at the annual changes to the CCI compared to CPI or what we call inflation in layman's terms. And as you'll see, they don't behave similarly, these two indices, especially around where we had the recession and those tough economic times. They behaved quite differently. So it does make sense to look at CCI versus CPI, again, in the case of drinking water infrastructure. If the CIP cost is looking like too much, how can we start smaller and drive the cost down? We can probably eliminate some projects. Maybe some projects could be deferred. They don't have to be done as soon as we originally thought. Repairing and refurbishing equipment instead of replacing them might be another option. Maybe we can look for solutions that have to do with something other than acquiring an asset. We can look at partnerships and collaborations with neighboring systems, perhaps. So there are a couple different ways that you can, if the CIP budget that your sort of pie in the sky or your first cut looks too big, there are ways to kind of pull that back and start smaller. And one note on that is to reevaluate in terms of the capacity. If some of your CIP is driven by capacity concerns, it's really important to reevaluate the water demand of your customers. We're seeing that total demand is decreasing over time for water systems across the country, and that has to do with more efficient plumbing codes and fixtures, and maybe even conservation messages and that kind of thing. But despite the reasons, total water demand is going down. So bear that in mind when you plan the projects on your CIP. Just a reminder also that life cycle costing is important. In other words, the purchase price for a piece of equipment is not the same as the total price. And this chart here that we got from Steve Albee, who does a lot of asset management work with US EPA, really highlights this concept. So this is what it costs to acquire your asset, whether you have paid for it through your own revenues at the utility or you've gotten a loan or grant for it. This is what it costs to acquire that asset. If we continue on here, over the life cycle of the asset, we have to spend a fairly significant amount of money on maintaining it. And then most assets, if they have a long lifespan, there are a couple points at which you have to do some refurbishing, and that could be a significant cost. And last but not least, with some pieces of equipment, there are actually costs involved in disposing of it once it reaches the end of its life cycle. So in all, the acquisition of the asset was only about 35 to 40% of the total cost of the thing over its lifespan. Whereas the maintenance, the disposal, and refurbishing it a couple times was actually a greater portion of the total costs of that asset. And this is sort of helping to explain the point that I made earlier about grants not being sustainable. If you had received a grant to acquire this asset, we found trends where the maintenance and refurbishing didn't happen as it should to really have the asset last as long as it could have. So somehow there seems to be a connection there. Okay, I'm going to demonstrate a couple tools here. One of them is off of this website, which is a good resource webpage for capital planning. And I'll pull this tool up here that you have an image of and walk you through it. And then we have a second tool, which is, it's a free, again, online Excel-based tool to actually create a CIP. So I'm going to switch here to so this webpage is on the EFC at UNC's website. And here we have a couple different resources for capital planning. One of them is this user-friendly capital improvement plan tool, and the other one So what you do here is you'd go to the website and you click on this link here that ends in .xlsx, and an Excel document is going to open on your computer, and then you can save that. But first I will go to the tool that helps you to decide what to include in your capital improvement program or plan. So when you open up that first tool, again, the name is What to Include in Your CIP. It's a reference guide for North Carolina water and wastewater utilities. And that's partly because it was funded by the state of North Carolina, but the resources we have in here are certainly not state specific. So this first tab, when you open up the tool, gives you a little bit of information and gives you the instructions. It tells you what the different tabs in the tool will do. All right, so starting with this first one, again, these are the instructions. Basically, the top row lists different resources that discuss CIPs and gives you different information about putting together a CIP. And then these different rows here in that first column, they are telling you, they sort of highlight. So for example, here we have EPA's Asset Management, a handbook for small water systems. Over here we see all of the characteristics or pieces of information that this particular resource is telling us to include in a capital plan. Next to that, we have a different resource, and that's AWWA's, American Water Works Association, M29 manual, which is called Fundamentals of Water Utility Capital Financing. And again, these checkboxes tell you, of these two resources, for instance, the AWWA one recommends that you include existing capacity and demand, whereas the EPA document is probably a smaller document and did not include that. So the checkboxes kind of give you an idea of elements, if you will, to include in your plan. And if you're starting CIP for the first time, you can start with a shorter list of elements and kind of develop it with time, get it to be more detailed and complex as you get the basics underway. This next tab gives you a summary, so you can expand these or collapse them. And then there's a quick view sheet as well that gives you just a kind of an image. And you can see how comprehensive some of these different tools are. So the deal with this particular tool is that we were making some updates on it in February of this year, and so the version that we have online right now at the point of this webinar is going to be revamped pretty soon. So hopefully by the time we send the email out post-webinar, we will have the new version up. The other tool I wanted to show you guys really quickly here is a user-friendly tool. Again, you download this and save it from the website. And so these are the instructions here. They're pretty graphic so that you can see where to put things in, where to put the information in. There's data input 1 and data input 2. And then you get some 20-year projections and a dashboard. So data input 1, you're looking at utility operations and characteristics. So you start by entering some basic information on your utility's rate structure, your customer base, and your current fiscal year financials. Then you enter the projects that you have in mind, so the CIP projects for the next 20 years. You include things like the project start date and end date and the cost, and you select a financing method for each project. Is it cash finance? Is it debt finance, for instance? And then the tool will calculate these projections for the next 20 years. It will calculate annual rate increases that you need in order to cover those capital reserve allocations and debt service for the 20-year period, and it will restrict your reserves from increasing perpetually. And then the results are displayed in what we call a dashboard here. So you get some charts so you can see how things are looking. And then you can go back to some of the data inputs and make adjustments if you need to. So that tool is also available on our website. And it's free to download and use at your utility. Okay, so if we move on here, these are a couple other best management practices that impress funders. So basically, we're saying that if you apply for a loan or even a grant from a funder, there are point systems. These are competitive processes, even for loan funds, and having a capital plan that you can refer to and document strengthens your application to the funder. They can see that your utility is organized, you have your projects prioritized, and you have a plan for continuing to provide service into the future, and they'll see where the project that you want them to fund through their loan is going to fit into your overall plan. And that is an asset. That's a good area in some cases to get points on an application process that is competitive. Some other best practices are asset management and benchmarking. We touched on asset management a little bit in today's webinar, but there are a couple other webinars that specifically focus on asset management. So I wanted to give you a link to one of those. And benchmarking is sort of calculating some of the ratios that a potential funder would calculate. So operating ratio, for instance, and debt service coverage ratio are examples. And then wanted to mention too that rates are key in all of this. As a reminder, obviously, to ultimately repay loans or to fund your capital improvement program or plan, you need to have rates that are well designed and appropriate. When we set rates, we want to be able to cover or to provide sufficient cost recovery. Sometimes we have to discuss what that means exactly. What do we mean by sufficient cost recovery? We want to make sure that we're following applicable laws in our different states, or a specific state, I should say. We want to allocate the cost to the right customers. So when we're looking at industrial versus residential customers, we want to be equitable in having customers ideally pay their fair share of the cost to run your system and their share of capacity in the system. We want, at the end of it all, too, for our customers to be able to understand our rates. So they should be simple, or as simple as possible. Besides being able to understand the rates, will our customers be able to pay these rates? Then do these rates send the right signals to our customers based on our objectives? So if the main objective of your water utility is conservation of water as a resource, then there are ways you can design your rates to achieve that objective. If you're looking at economic development, there are ways to design your rates that would sort of promote that as well. So making sure that the rate structure that you've come up with or rate increases, as the case may be, align with your overall objectives is important. And then considering, will revenues be resilient to changing water demands? We talked, for instance, today about how overall water demand is decreasing. And so we have to design rates that will give us the revenues in such a way that it's resilient. Our finances are resilient to these changes in water demands. Okay, at that point, we are almost close to the first hour here. So wanted to make sure that we left enough time for questions. And we have a couple poll questions that we'll ask now before we go into other questions. I'm going to hand it over to Brad to go ahead and pull up the last couple polling questions, please.
Sure. So I'm not going to share the results of these polls because they probably wouldn't be interesting for everyone, but the first question is, would you like to subscribe to the UNC Environmental Finance Center blog? And just take 20 seconds to indicate yes or no. And then if you said yes, we'll add you to that list. Okay, thank you. And the second question, are you interested in receiving in-depth technical assistance for your small water system? Okay, great. So we'll go back to Stacy for questions.
Sure, and I'm just going to try to show, for instance, here, Brad, since this came up on the last poll, you can indicate on the polling question that Brad just pulled up if you wanted to get direct technical assistance. But hopefully you're seeing the website again for the EFCN project that we are talking about today, and there's also a link on there. So if you fill out the poll, we'll contact you and we'll get specifics. But if you want to be more proactive, we did tell EPA that we can do a certain number of technical assistance engagements, if you will, and so I think we are trying to do 120 across the country, so it's going to be sort of first come, first serve. This is the technical assistance request form, so it's just a couple pieces of information that you put in and you hit continue, and that gets submitted to us, and then we'll contact you about the specific type of assistance that you need. So I just wanted to take a second to show that for the folks who wanted to get ahead on that process.
So Stacy, are we ready for questions at this time?
Yes, I think so.
Okay. Just a reminder to everyone that they can go to the questions box and type in a question and send it to us, and then we can ask Stacy from there. So we have a couple of questions. The first one, how can the state contact be updated on the SWIE.org website?
That is a good question. You can send something to me and I will get it to the folks who run that. I would have to check. So the first thing would be to check the SWIE website carefully to see if there isn't a way to contact the administrator there. If not, then I should be able to get in touch with that person, but maybe we'll pull up the website and see if there's an easy way to contact folks. Okay, so the top right-hand corner does say contact SWIE, and there is an email address for a webmaster. So that would be my first suggestion, and there's a phone number as well. But if you can't reach them that way, you have my email address, I believe, from this webinar, and I can try to reach. The gentleman over there is Steve Grossman, who has been running that, and he's out of the Ohio Water Development Authority. But good question. Thank you.
Okay, and our second question, do you assist privately owned water utilities?
Privately owned is sort of an ambiguous term, but the answer is basically yes. So if you're a privately owned water utility but you're serving the public, then yes, we can assist you, especially through this project if you have 10,000 and less of a service population. And a good rule of thumb, if you're not sure how many you have in terms of population, if you have about 3,000 accounts or connections, that's roughly about 10,000 in service population. So yes, we should be able to assist you. A good way to tell.
That's all we received for questions.
Okay, well, Brad, I was going to add. I'm sorry. A good way to tell as well is, do you have a PWS ID, or Public Water System ID? And that's one of the things we ask you for when you sign up for technical assistance. And if you have one of those, that helps us to get a lot of information about your system, and it's a good way to figure out if you qualify for assistance under this program.
Okay, we just received one more question. So in the Northeast, what are normally expected ranges of water and sewage rates with respect to median household incomes? For example, is it in the 1% to 3% range? And if it is not over this range, normally grants don't apply. Is that correct?
That's a good question. So we're looking at the northeast part of the country. So how much water a household even uses depends on the state or the region as well. And then the question also referenced median household income, which is not a perfect way to measure affordability for water and sewer services, but it's what we have based on, it's available through the census data. There is no rule of thumb. There are a couple of guidelines, and actually I will refer you to a webinar that we did through this project. I think it was last fall, and it was focused on affordability. But there is no rule of thumb. 1, 1.5, 2%, sometimes 3 or 5% combined water and sewer of MHI are examples that we hear quite a bit, but they really are not rules. So it's very difficult to tell, and it has to be looked at the specific community level. Assuming that this web browsing is a good way to go, I will kind of use this to highlight some of the resources in this area. Unfortunately, it's not a hard and fast rule. If you go under past trainings, you should be able to access the affordability webinar that I mentioned. And you see here we have the webinar that we are doing right now. But if you scroll down, you should find one on affordability. This one is benchmarking, by the way. I mentioned a couple of these in today's webinar. We've done, as you can see, workshops in many states. This one was about budgeting.
Maybe while you're here, okay. I'm looking through some of the other questions that we're receiving. Okay. And one of them is, do small systems have asset inventories, or how could they go about obtaining an asset management inventory? So maybe this might be a resource as well.
Yeah, so the affordability webinar is here, and there's a specific tool, and I'll get to that question in a second, Brad. So you can download the actual slides here, and one of the things that it will take you to is a tool to look at affordability for a specific community. So the fact that MHI or median household income looks at the middle income within a community, when you think of things like affordability for a basic service that's a necessity for life, like water, you're not only interested in what the second bottom half of the population's income is. You're looking at the whole spectrum. You're looking at the folks that you're more concerned about, the population sectors that are in the 10% range of income. So there is a tool that we use that looks at affordability. It looks at poverty levels. It looks at other types of census information that's available, like even food stamps, for instance. So this is another webinar, and this is the assessment tool that I was talking about. So you can click here, and as you can see, even though I work for the EFC at UNC, the way I navigate the website is to use this search tool, because we certainly have a lot of material on here. So you can see in real time, you just click on the link, and then the tool is being downloaded, and it will open up. Like the ones that I showed you today, the first tab shows the instructions, and then you have the inputs. And this tells you exactly what few pieces of data you need to pull from the census website and how to do that. And then you put in the water and sewer rates for your particular community there. And then this very specific thing about what is the approximate average residential monthly consumption, because that varies by state and region. And then on the assessment, you'll get some charts again that show you like I was saying, the spectrum of affordability. And so this would populate once you put some information in, and would tell you the lowest income households, for instance, in your community, and what percentage of that income they are spending on water and sewer service. So that's a detailed answer to that question, but this is really the best thing that we've seen to measure affordability at a specific community or utility. And so unfortunately, the national guidelines of 1, 2, 3, up to 5%, they are just guidelines and certainly not perfect. So Brad, the other question, I'm sorry, was about asset inventories. Could you repeat that question, please, Brad?
Yeah, the question was, are there asset inventories for small systems, and if not, then what resources are available, or what is the process to obtain an asset management inventory?
Yeah, I believe the what to include in your CIP tool that I demonstrated, one of the things there is one of the resources or elements that some of those resources include would be examples of asset inventory, especially the EPA handbook. That's, I believe, the first resource listed in those columns there would give you an example of the asset inventory.
Okay, and then pertaining to what you were just discussing with this tool, I believe this question, should the collection of reserves from customers be used to benefit the customers who paid into the reserves versus future customers who did not contribute to the reserves?
I'm not sure I completely understand that question. So you think it's about this affordability tool, Brad?
It might not be.
Okay, so should the customers who invest into the reserve?
Should the collection of reserves from customers be used to benefit the customers who paid into the reserves versus future customers who did not contribute to the reserves?
Okay, I think it's a question of equity and putting aside a lot of the money that you will need to replace a piece of equipment in the short term versus having the customers who would benefit from that. So you may have customers in the next 10 years, they are paying into this reserve account that's going to replace a piece of equipment, but then let's say after 10 years they leave, and then there's another customer in that household, for instance, who has not contributed to the reserve account for that particular piece of equipment. It's a good question, and it's really hard to balance these equity things. So some say that that makes a case for amortizing a loan, for instance, and the payments. But yeah, it's a tough thing to balance for sure. And so ideally we'll kind of split the cost, I guess, between, so we put something aside to replace the asset, but ultimately, you know, once we replace it, it needs to be replaced again in the future. And so the new customer could contribute in that way as well. But not a simple answer to that question. It's a good point.
Okay, a couple more related questions that are related to each other. The first part is, does the EFCN assist communities who are just starting out with a water system versus pre-existing water systems? And then if technical assistance were to be provided, what is the exact service that the EFCN provides? And maybe we could just give a couple examples of what technical assistance we provide.
Okay, so the first question, yeah, certainly if there's a new water utility that's probably developing rates for the first time, there's no limitation in this grant. We are open and able to help those systems. They are eligible. And then in terms of technical assistance, so I gave you maybe 9 areas starting from asset management. We do water loss as well. And so the way the technical assistance works is that we will be able to spend about 20 hours with your specific utility, so an individual utility, helping in one of those areas. It sounds like a specific example is required here. So we know there is a system that feels like they don't have any reserve fund set aside, and they would like to start reserving some of their funding to replace to develop a CIP program. And so they they feel that their rates are inadequate to do that. So they're looking at a rate increase, for instance, and so they ask us to help them with some of the considerations of their rate increase, and to help them get started on the road of developing a reserve fund and a CIP. So that's 3 big areas right there. We've had another system in North Carolina say that they want some help with asset management. They have never really started an asset management program. Another system said that they have a CIP, but it's pretty old. They haven't really dusted it off and used it as a living document, so they want us to help them with that. We have other systems that would say, you know, we think that we're spending too much on energy, and so energy management is something else we can help with. So those are just some examples.
And then we had a question, are there similar resources available for large systems that serve over 10,000?
That's a good question. There's a lot of national focus now on these smaller systems because there are numbers from EPO statistics that show that the smaller systems are having more problems with compliance, and just being smaller, they have smaller staffs and less capacity. And so this particular program of EPA works to develop the capacity, financial and management capacity of small systems. There are some resources, but they're not quite like this, so I'm not as familiar. I think it's more with the larger systems, it tends to be more of a one-off situation. So if there's a particular issue that your system needs help with from EPA, then usually they are not technical assistance providers out there that you go through, but you go to EPA itself. So yeah, nothing quite like this for the larger systems.
Okay, so unless we receive any other questions, the last one was, will the participants of this webinar be receiving a certificate of attendance? And the answer to that is yes. In an email when we send out other resources to you.
Okay, so we'll send an email and you will get a link to the recording of the webinar and some of the tools that we talked about. And thanks for your time and participation today.